Welcome back, guys. Today we're going to take a look at Stellantis. Now, this is a car company. They own lots of different brands, and they are up 65% in the last 5 years. They have actually outperformed the S&P 500 because of their massive dividend. So this is better than the S&P 500 if you include the dividends. The price to earnings ratio right now is only 3.5, so super, super low. It could be really good value right now. Its market cap is 66 billion, so pretty large company, car company. What brands do they own? They own a lot of different brands. They own Jeep. They also own Chrysler. They own Dodge. They own Fiat. Not that Fiat's even that good. They own Ram. So they own some good brands, like Ram, Dodge, big truck brands, Jeep, Chrysler. I see a lot of those brands in America all the time. Their performance, here's a quick look at their financials. Well, they're they have grown quite a bit in the past 5 years, and now they've been pretty consistent the last 3 years, and with expanding margins on a semi-annual basis. The last semi-annual basis, their margins did contract a bit, and the revenue did fall. So that, I think, is the concern. The concern is that the car market's not doing so hot right now, and that their revenue and their margins are going to compress. So I think that's the reason why they're not up so much with such low price to earnings ratio. So yeah, here's a quick look here. And between 2020 and 2021, they did acquire a business, and that's one of the reasons why their revenue jumped by so much, 100 billion. Also in 2020, what's interesting is that even with such a large drop in their revenue, they were still able to keep a positive margin, which is insane. Usually the margin would go negative, but they were able to keep a positive margin, which is a very, very good sign for this company. And they have been buying back stock. Well, actually, they had to issue a bunch of shares when they merged. They merged with another company in 2020. And so they issued a bunch of shares, but otherwise they have been buying back stock. In their balance sheet is actually really good for a car company. Normally, car companies have tons of debt because of all the manufacturing plants that they have. But this company actually has negative net debt, which is very good for a car company. Like Ford, I'm pretty sure has tons and tons of debt. And yeah, even in total debt, it's not too high at only 32 billion. In terms of cash flow, their cash flow, they buy back some stock, they pay quite a big dividend, and they still have 13 billion in free cash flow. So they could pay off debt, they could leave it on their balance sheet. Lots of different things they could do with that. In terms of their stats, let's look at their return on invested capital is 20. That's really good. Operating margin, well, gross margin is around 20 every single year, and it translates pretty well into their net margin. Looks like their net margin was 8, going up to 10 or 11, and then back down to 8. So very, very solid margins, honestly. Pretty good. Actually, on an annual basis, let's look at that. Oh, actually, way back in the day, they were only at 3%. So it's definitely possible that they go back down to that in a tough car market environment. However, I don't really see them going negative in their net margin, especially since they didn't go negative during COVID. So yeah, pretty solid. Let's look at what the analysts think. The analysts are projecting 5.74 going to 5.78 in earnings, and their revenue 202 billion going up to 209 billion. It's basically a 3% increase into 2025 and then a decrease this year, which makes sense. Let's look at the stats. Look at the short percentage here. Short percentage is extremely low. This is a very green flag. Very, very good sign on the short percentage. Let's look at the model I have for these guys. So this is a model I put together. I put the estimates up here. The earnings estimate, revenue estimate, buybacks of 3 billion. They are doing buybacks. Net debt of negative 21 billion. Discount rate of 10% because I want the 10% return on all my stocks. Exit multiple of 10. I think 10 is fair. 10 is super low. It's for a car company with that could possibly be a dying business in that they produce mostly gas vehicles. And yeah, very competitive industry. So I think exit multiple of 10. It's low, but I think it's fair for a car company like this. Right now they're trading at like 3.5. So yeah, super low multiple they're trading at right now. And in terms of growth, I have their earnings going -10 and -10, and then staying flat from there. And even with this assumption, their fair share price is going to be $52 a share. So pretty solid there. And with them trading at 22, they're currently massively underpriced. And with their earnings model, or with the revenue model, I have their revenue staying flat at 0% and their margins compressing. So I have their margins compressing down to 6%. It's definitely possible that their margins compress even more than this. They could get down to 3%, I think, but I don't think they go lower than 3%. Maybe we do a worst case scenario here. Maybe we go all the way down to 3% here. I mean, the analysts are projecting 8% for this year, so maybe we go 3% from there. And in this case, they are still underpriced, worth $31 a share, with them trading at 22. I think I might open a position in this. I think it's a very solid company. There is one guy also that owns some of this. Yeah, here's the super investor, Greg Alexander. He owns a bunch of Stellantis. 22% of his portfolio is Stellantis. However, last quarter, he did reduce his position by 50%. So this used to be 44% of his portfolio, but now it's 22. So I don't know what to say about that. Maybe he thinks that $28 per share was a top. However, he didn't sell completely out of it, so he still owns it, like a large part of his portfolios in Stellantis. So yeah, so maybe he's seeing something coming down the pike that could hurt the stock price short term. However, I think this in the long term is going to be a good hold. So yeah, that's what I think. Let me know what you guys think in the comments. Let me know if I missed something, because it seems like I might have missed something. And yeah, hit that like button. I'll see you in the next one.